of Coastland Mortgage, and this is 3 Points. And it's where I help educate some of our clients and partners about things related to the mortgage and real estate industries. And today I was going to talk about the top 3 myths about getting a mortgage. So the number 1 myth is that you need a 20% down payment in order to buy a house, and that's just so far from the truth. I mean, we have 0 down payment requirements on some loans. If you're a veteran or active duty military, you can get the 0 down VA loan. If you're in a rural area, you can qualify for the 0 down USDA loan. But for the most part, most people will qualify for a minimum 3% down, whether you're a first-time buyer or a seasoned buyer. As long as it's a primary residence, you can purchase a home with 3% down. And on investment properties, you can do it with as little as 15% down. The second big myth about getting a mortgage is that you're better off going to one of the bigger banks, and that's just not true. Brokers and lenders, local lenders, are a better option for a number of reasons. One, they have local knowledge, so they know a little bit more about the neighborhood that you're trying to get into, and they can craft a loan that works for that area. They have better access to loan options, so a bank is limited to what that bank provides, whereas a local lender or broker has access to a number of banks and a number of lenders, so they just have a wider array of loan options for a buyer to better fit their needs, and they have access to more interest rates, so we can shop around to find you the best rate in the entire country, not just at that one particular bank. And it's something that you would have a very difficult time doing on your own. At Coastland, we can go across the country, find you the lowest interest rate, in a minute. Whereas obviously it would take you quite a while to do the same thing. So that's another reason why working with a local lender or broker is a much better option than going to your big box bank. The third and final myth about getting a mortgage is that a pre-qualification letter is the same as a pre-approval letter. They're very different. You should really only work with someone who's going to get you a pre-approval letter, because the pre-qualification letter isn't based on that much. And when you only take that early step of getting pre-qualified, it can lead to problems down the road later in the process when you've really set things up, like you have movers in place, you've listed your home that you're moving out of. So it can create a lot of problems if you don't do your due diligence in the beginning to get a pre-approval. The big difference is that a pre-qualification letter is really just based on your loan officer checking your credit and then using the income figure that you gave them verbally. Whereas a pre-approval requires that you send in some documents. The loan officer will verify your income by checking your pay stubs and your tax returns. They'll verify that you have a job, and an underwriter actually looks at the loan and underwrites it, so that we know with certainty that you're going to be approved for the home, and that there won't be any hiccups down the road, and that you get into your house and you have a great experience. So it's very important that you work with a lender that is taking those extra steps at the very beginning to get you pre-approved. So again, I'm Eddie O'Neill, and this was 3 Points.